Thank you, Lascan Corla. Lascan Corla, inflation makes everyone poorer, and particularly those that are on fixed incomes. And I want to just focus on one aspect of inflation, and that is the issue of energy inflation. Gas prices, based on the Department of Finance documentation, is projected to rise by another 50% over the coming months, and will then settle at a rate about 10% higher than the current prices in the second half of next year. And that's going to have a significant knock-on impact on electricity prices here in Ireland. And electricity prices have gone up far more significantly than any other fuel cost in this country so far this year. And part of that is because of the speculative data centre development for companies that are not employing anyone here in Ireland. The cost of providing green electricity to them, the cost of physically providing the grid connections to them. On top of that, we have speculators who are profiteering on renewable energy developments. Just last month, there was a newspaper report regarding an Australian infrastructure giant called Macquarie, who are buying up the rights to develop an offshore wind farm 5 kilometres off the Connemara coast. That's the rights that were handed over by the Department of Energy to the previous developer. And what's the state getting for that licence? Absolutely nothing. And who will ultimately pay for that? Families and electricity customers right across this country will be the ones that will ultimately pay the price for that. And the families that are struggling with paying electricity bills today are the ones that are paying for these speculative data centres to be developed. They're the ones that are paying for the speculation in terms of renewable energy projects off our coasts. On top of that, we have the impact of carbon taxes. Now, in relation to electricity, that is levied at EU level through the emissions trading system. But we're disproportionately penalised for the use of oil, coal and gas, fossil fuels, in the generation of our electricity. And at the same time, electricity customers here are losing €176 million in charges that they have already paid for the 2 power stations in Lanesborough and Shannonbridge that could be burning biomass for the next decade, helping to address the electricity shortfall that we have in this country at the moment over the winter period, as well as reducing the carbon tax levied on electricity, just like it's older, the two plants' older sister, the Eden Dairy plant, what it's doing today. But to do this, it would require Minister Pippa Hackett to take a very different approach to the bottleneck that is the felling licences for forestry at the moment. And by doing that, we could release the brash byproduct, the branches, etc., to actually fuel those 3 power plants across the Midlands. And it would also provide time to local farmers to establish biomass crops that could have a big impact on their financial sustainability, as well as having a significant impact on our overall agricultural emissions. But we also have a situation that the carbon taxes that have been collected here in Ireland were supposed to have been invested in reducing overall emissions. But it's little more than a 3-card trick, what's going on with Carbon Tax Fund at the moment. Next year, there will be €412 million collected in carbon taxes. €174 million of that will be going into social welfare payments, which won't take 1 additional tonne of carbon out of our atmosphere. €36 million will be invested in just transitions and greenways, which will have a minimal impact on our carbon emissions. €202 million will be invested in retrofitting in 2022. But back in 2019, there was €90 million allocated, and that was profiled to dramatically ramp up from 2021 onwards. And that was before the Green Party increased the carbon tax. So the key question is, how much new money is going into retrofitting? In fact, there is a 50% shortfall in what was profiled when I was Minister and what is actually going in now in 2022. Because Project Ireland 2040 set out a commitment to retrofit 45,000 homes per annum from 2021. Yesterday's budget announced 22,000 homes would be retrofitted. Just 4,500 of those homes will be people in receipt of the fuel allowance. That's out of 370,000 families in receipt of the fuel allowance at the moment. In fact, there are 7,000 families today on the waiting list for the retrofit that are in receipt of the fuel allowance. They will wait 26 months to have that carried out. So, how much of the €412 million collected in carbon tax will provide new government spending to bring down carbon emissions? Zilch. Absolutely nothing. And from the carbon fund, farmers are going to lose out at the sum of €49 million. The one area where we could actually have a real impact on emissions. Better grass management alone could help to address our air quality, ammonia and nitrates problems, as well as reducing methane emissions and promoting greater soil carbon sequestration. The Carbon Fund should be used to fast-track research on practical carbon sequestration on our pasture lands and on our hedgerows. Nothing is going into that. We should be investing in a suckler cow environmental scheme. We propose that it should pay out €200 per animal on 20 cows for sustainable suckler beef production, along the lines of the Smart Farming Initiative. And in some cases, farmers have seen a 20% reduction in their environmental emissions, which is twice the current target that has been set by the Department of Agriculture for the agricultural sector. And just very finally, we have 3.7 million sheep in this country. Farmers are giving away wool for nothing, and yet there is a shortage of insulation in this country to retrofit homes. Surely it's about time we connect up the dots. Thank you.